Welcome back to the channel. Today I have Spencer on with me again, and we're just going to talk about everything ETFs. So, how you doing today, Spencer?
I'm doing great, Brad. I can't complain. Thank you for having me back on again. It's going to be amazing.
Yeah, did you have a good Christmas?
Phenomenal. Time with family, some relaxation, some trips up to the snow. How about you?
Wonderful, wonderful vacation. I didn't do hardly anything, and I'm near my daughter, so I got to see her on Christmas Eve, and we exchanged presents, and good stuff like that.
Amazing.
But but let's get into the markets. One thing that we've seen recently is the run on silver. All right, what's your feelings?
We were just discussing this. I did purchase a silver ETF. I mean, I felt like it was last week. It must have been 2 or 3 weeks ago. And I was checking my stuff last night and I'm up 20.5% on it. And it just blew my mind. I mean, there was one massive day where it just ran, but ticker PSLV, the Sprott
Mhm.
Physical Silver Trust. And currently, I'm up 20.44%. It just blows my mind, and people are estimating it'll hit 100, per ounce, I think it is, sometime soon, and if it does, amazing. But silver and gold, they are just the unsung heroes of 2025. Not a lot of people are talking about them, but I will say the minute we start seeing a lot of issuers creating funds based off a commodity or a stock, something's happening there, right? We've seen a lot. I mean, what? I don't think no Neos doesn't have any yet, but we have some from Granite Shares and we have some from Roundhill, and I think their Yield Max might even have some as well on these silver and gold. But as soon as they start making these ETFs, these income ETFs on these, you can tell something's heating up. So
Yeah, and I use Curve for my
and Curve,
income
yes.
side for the silver, but
Hmm.
I do have Curve and Neos for the gold side for my income,
Mm.
and I still have the same uncapped growth gold fund as you do, right? So
Yep.
it's
Yeah, I
I can
forgot
see
about
that one.
Neos. What IAUG or something. Yeah, has that been good for you?
It has. It's not up as well. It has a
Mhm.
lower beta than Curve, but that's exactly what I'm looking for. I'm looking for a lower beta on gold than the Curve fund. Curve is really close to that point 0.9, almost a point 0.1,
Mhm.
which means they're also going to see when the price goes down, they're going to go down, even harder than
Yep.
Neos will go down. And that's the risk and return, right? I mean, that's all asymmetric risk, right?
Yep. Definitely. And I do have a question for you, Brad, because I would like to diversify a little more into silver, but we've talked about having a miners ETF tied in as well. So, do you have any? Of course, they're not financial recommendations, but any that I should look into that are a miner combined with that exposure to silver?
So I do have one, SILJ, which is the junior silver miners from Amplified.
Amplify.
And that is a uncapped. I do believe their actual one is SLVY for their income fund. You can find that on their website. You can find their income one, and you can find the one on the uncapped growth
Hmm.
on their website. They haven't done quite as good as the silver fund,
Hmm.
but that's because a lot of analysts, and this is just my opinion, a lot of analysts aren't upping their forecast until later because the price of silver has shot up so quickly.
Yeah.
The analysts have not kept up with their forecast.
Hmm.
I do follow a couple people on X now that are way better at this than I am. Let's face it, right? I saw the opportunity about 6, 8 months ago
Hmm.
when I did my first silver video, but there's analysts out there that cover this like that's all they do, and it's always good to find those out on X.
Well, and you
Yeah.
caught the curve beautifully. I mean, because right now SILJ, the Amplified Junior Silver Miners ETF, is up in the last 6 months 102.7%. And in the last year, if it loads, 200 and over 205%. That is just amazing. So I want your thoughts as well. Like, people are always asking, am I too late? And I'm big on silver, as we've kind of seen the shift into these assets, scarcity assets. Do you think Are we due for a pullback? Is silver going to hit 150, 200? What's your take on it in the long term? Not just 6 months, but a year, 5 years out.
I think that we're going to see a pullback
Hmm.
eventually, and we might even see a pullback a little bit this week.
Yeah.
But I'm going to say everything that I read is we're going to get up to about 91
Hmm.
before we start to see maybe some sideways movement, maybe even a pullback at 91.
Hmm.
And then I do believe we're probably going to hit the 100-hour range sometime. I think the line share, the quick money, I think
Yeah.
that may or may not be gone. But
Yep.
the other one is, and I saw this, I saw an analyst the other day, and he usually covers Bitcoin, but he started talking about silver and gold.
Hmm.
And his comment was, even if we have a slight drawback, it's not going to be as bad as other drawbacks like 2011. But
Yeah.
I think everybody has to put that back into perspective.
Hmm.
2011 silver clearly, went back down, but
Hmm.
that was also right around when they said quantitative tightening instead
Yeah.
of quantitative easing. So doing quantitative easing, I think this is the better play, right? And
Yeah.
that's where the Fed is going. They're printing, and as long as they continue to print, we should probably continue to think it's going to go up.
Hmm.
It might not be a straight line, but it should go up. I also think the banks in the United States are no longer short. For
Yeah.
a long time, a lot of banks were short. I think that has really came to an end. I think they're actually long now. What I understand is the Europe banks are still short,
Hmm.
but that's on them. I don't care if the euro goes down.
Yeah.
So sorry for all those Europeans out there, but
Yeah.
that's that's
It's
how
like
it
it's like
works.
less than 1% of my audience, so hopefully we're safe.
Yeah, I mean, it's just one of those, So I look at that going, not too worried, and I don't always forecast where things are going. I mean, I still
Mhm.
hold my Bitcoin funds.
Yeah,
Right? I mean, Bitcoin hasn't done anything this year. It's actually kinda down for the year.
which is crazy to think about how it hit over 120,000 and now it's back
Yeah.
down into the 80s, into the
It
90s, and you've ended up, yeah, negative even. I think it was 11% down last time I checked on the year chart.
and, somebody asked me about that on X, and that's the reason I brought it up because so, if you bought the top, you're down almost 30%.
Yeah.
And I was one, I said, "Yeah, if you listen to me," I said, "Don't buy it above 110." That's okay, that's fine. You
Yeah.
didn't listen to me, but let's go ahead and break that down. If you buy something like Neos, paying right around that 28% is what they're, on average, I'm gonna call it.
Mhm.
This you can go down 70% and still collect your 8% on your original investment.
Yep.
And that is where I kind of draw that difference in line is hey, I'm only taking 8% annualized
Yep.
and not and it pays me 28%. That means it can go down 70% and I still get my 8.
Mhm.
Well, I don't think Bitcoin's gonna go down. I'll give you a forecast. I don't think Bitcoin goes down another 30% from here.
Mhm.
I does it hit 75? Maybe,
Mhm.
right? But it still gives me my 8% that I can take. And by the way, it's been now a couple months that it's been down. I've averaged down a little bit. So,
There you go.
I did reinvest back into it. I came up with a new bar saying that if it's below 90.
Yeah.
So, if it's below 90, I'm putting my money back into it. If it's above 90, I'm not buying anymore. I just let it sit, and even if it goes sideways,
Mhm.
I still collect 28% from Neos. What I care.
Yeah, it's amazing, and it's funny, I just did a video, and I'm curious your take on this, Brad, on MSTR, where there's so many MSTR funds now, and most of them the video was kinda spurred because I tracked the weekly payers, and the worst performing 3 were all on MSTR. I think you had
Yeah,
MSII, you had the not the Neos fund, you had Rex, you had Yield Max, and you had Roundhill, and they were, yeah, terrible. Sorry, not no, it was Defiance. Defiance
Defiance
MST
MST. Yep,
because it's a 2x levered.
leverage.
And yeah, so that I'm curious, if we were to start a position now, you could utilize the distributions to consistently drip and buy more and more and more of something like, I would probably go with MSII because you have that leverage component and you have the income component. Um, MSTW from Roundhill could also be solid, but the income is just based off that leverage. But then MST could be a huge winner in 2026 if we do see MSTR bounce back. Now, my fear with that is it's so leveraged, you get to a point where these funds are just like done because it's fallen too much. Because with dividends reinvested, it was still down 62%. With dividends not reinvested, I think it was down over 90%. So I don't know if these things are at risk of just completely being dissolved as ETFs as we see things. If we saw MSTR fall another 10, 20%. But I wanted to get your take on that. Is there opportunity here to utilize that drip and keep buying it at lower prices, or do you think that's just a crazy high risk thing? Because I'm leaning on the side of high risk, but I might do it for YouTube. I might just invest some and just track and see how they do.
I think that's high risk.
Yeah.
So I was a big fan of MSTR for a long time, right?
Hmm.
And I'm still a big fan, right? I still hold one of the preferred stocks,
Yeah.
right? I don't think that that's a negative of MSTR. They have a what I'm going to call they don't have enough income,
Hmm.
right? So if you look at their balance sheet and everybody's like, "Oh yeah, look at their balance sheet," and I'm like, "Yeah, I looked at it. There's no income."
Yes.
Right?
Yep.
And that's the problem what I have with MSTR. Do they
Hmm.
change things around? I don't know. If the price of Bitcoin goes up, yeah, their treasury goes up, but that still doesn't mean that they have any income,
Hmm.
right? There's still no income from that. The only way they could get income is to sell Bitcoin, and nobody wants them to sell the Bitcoin,
Exactly.
right?
Exactly.
Do I think they're going to get liquidated? No, I don't think that.
Hmm.
I think that side of the fence is also a bunch of FUD. So no, but put it like this: if I was going to do something on MSTR, and I would wait for it to get back above the 200-day simple moving average. If
Good
you were
point.
watching the MSTR and you would have bought winter when it crossed the 200-day simple moving average,
Yep.
you would have done very well.
Yeah. Oh yeah.
So that 200-day really means something that you should really be paying attention. You could have been in Misty, and as soon as it crossed the 200-day, the problem with that is you don't want to do this in a brokerage account,
Yeah.
right? Because now you get well, I guess you can have some tax loss harvesting and stuff like that, but
Yeah.
you can get wash rules and everything else, and you just don't want to. You don't want to be a day trader.
Oh yeah.
Right, and I try to stay away with that, I try.
Hmm.
Trust me, it's very tough, right? Um,
Oh yeah.
I'm long NVIDIA, or not
Yeah.
NVIDIA, but NV double I from RexShares,
Yes.
right?
Yes.
You know, that has done very well for me. Now, there's obviously some nav erosion. It stands out to me like a sore thumb,
Yeah.
right? But if I look at my total returns, I'm doing extremely well.
Yep.
I only reinvest back in it every now and then,
Mhm.
and I've been taking all the distributions and buying something else.
Yep.
That one has played out very well for me. So I'm going to say no on anything MSTR
Mhm.
at this time. Even winter. I had some winter for a while and I did well in it. And I'm like, it's MSTR is starting to go flat,
Yep.
right? So there's no reason. I don't think we're going to see a whole lot of price decay from this
Yep.
point.
Mhm.
Right. So it's just a matter of, hey, if we start seeing MSTR going north again, it's a directional bet. Then hey, you're right. MST could do well because it's 2 times leverage,
Yeah.
and that gets me to those roundhill funds. 1.2 leverage,
Mhm.
and I cringe because I don't think it's everybody realizes that the leverage on those isn't the same leverage as you have for SPY. Because of the volatility, their leverage cost is much higher.
Yeah.
And they're directional bets. if that stock is going north, then yes, you want to be in it. That stock starts to go south, you do not want to be in those funds.
Yeah, you are stuck, and I'm curious, Brad, because I've always questioned this. Have you ever done any interviews with Roundhill?
No, actually, they stopped. The last one that they were on was on retire on dividends,
Yeah.
and he asked a question, and after that, they have stopped doing interviews.
Yeah. Was it a
Right.
hard question? Like, that's so interesting. I didn't know that.
So okay, what it came down to is how they were going to roll the synthetics, and this is
Yeah.
what I got into the whole Roundhill XTT because I used to think XTTE, QDTE, they were great funds, and
Mhm.
they're still not bad funds,
Yeah.
right? Don't get me wrong, they're still not bad funds, but it got into how they were going to roll those 1256 contracts,
Mhm.
and come to find out, they didn't even do the heartbeat trade. So the only way that they could actually roll those contracts without seeing the gains
Mhm.
is to do a heartbeat trade.
Yeah.
You know that they did a heartbeat trade when the amount of shares doubles one day because they will issue new shares on that. And then the next day they will take away the shares and it literally looks like a heartbeat on a
Yep.
chart. Right. You know that if you had a Bloomberg terminal. And the person that was telling me all this has a Bloomberg terminal, so he could tell me that they did not heartbeat trade.
Mhm.
So you sit back and go, all right, so they didn't heartbeat trade. But since then, and they're rolling XDTE and QDTE are rolling their synthetics on a quarterly basis, they've been actually able to keep their NAV fairly steady
Mhm.
ever since then, which is impressive. But at the end of the year, and it's they always have to pay out any gains of those synthetics at the end of the year. And you saw like their NAV went down 5%,
Yeah.
last week. And it's just like doing nothing wrong. Total returns doesn't matter.
Yep.
Right? Total returns, it doesn't matter. But if you're someone like me and psychologically I like to see my share price stay flat or even or up a little bit,
Yeah.
might not be the fund for you.
Mhm.
I mean, that's why I like T-SPY and, you know, TDAC is I see some capital appreciation and I get a decent payout,
Yep.
all right? And they use the same strategy,
Yeah.
right?
Oh,
They
yeah.
just
That's
don't
so interesting.
they're just not as he's more conservative
Yeah.
than they are, right? And that's I- I'll take a little less in percentage so my actual price appreciation happens,
Yeah. Oh, yeah.
right?
And do you
And that
think that the 0 DTE environment we've been in, David said on our trip that he thinks that it's just been a really good environment for the 0 DTEs. Do you agree with that? Do you think we can continue to see this type of environment? Because the 0 DTEs, I'm not an options expert by any means, not anywhere near your level. So I always appreciate your feedback on these things because I didn't even think about that. Like, oh, are TDAC and T-SPY only doing well because it's a good environment for 0 DTEs? Could we see this flip and see them have NAV erosion, see the distributions fall a little bit? What's your take on that?
since I had Cy on the channel and I almost almost questioned him on that kind of on those lines.
Yeah.
Uh, so TDAC has only had to roll one of their calls one time since inception.
Mm.
All right. So that tells me that yes, we have been in a very good environment for zero DTEs. He normally says he rolls about 5% of the calls. So, 15 a year, maybe,
Yeah.
right? Something like that. So that tells me, okay, if you've done one in 3 months, that means you really probably should have done three or four. So
Hmm.
it has been a very good environment for him. Biggest one with TDAC was that April 9th, or T Spy, because TDAC wasn't around yet. T
Yeah.
Spy was that April 9th. And
Hmm.
that's when they got caught out by President Trump 10 o'clock in the morning telling them to buy the market, and market went up 9%. Even
Yep.
though they wrote their call 6% out of the money that day,
Mhm.
they had 3% NAV erosion, and
Yeah.
they've lost that 3% forever.
Mhm.
But since then, they've gained like 1.5% in total returns above SPY just because they're scraping off a little bit of income every single day.
Yep.
So over time, I think they're just fine. But that gets to the bigger question. Even even these funds, my fund of choice, QQQI,
Mhm.
if the market goes down 50 to 80%, it, those cover calls are not going to help us. What are
At
your
all.
feelings?
Yeah, not at all. I mean, and that's the scary part when it comes to the income side, and that's why I probably keep more in cash as a percentage than I should. I'm sitting right now at about 20 to 25% in cash, partially because I'm adding more to my Roth account, and partially because I did sell out of some positions that I'm like, oh, 2026, we'll see how things go, kind of shaping up my portfolio a little more to just kind of cut some of the fat, I would say. I got rid of a lot of my BDCs because of the interest rate environment that we're in right now. And some of them did severely underperform when rates were higher. And now we're seeing rates come down. So I was like, I'm gonna trim some of these positions. But when it comes to the Qs, it's so interesting. I feel like no one is really in the middle. And I'm kind of in the middle, right? I'm along for the ride. If the Qs go up like crazy, sweet, absolutely amazing. If they go down like crazy, honestly, I'm still really happy. Even though I've lost money on my current positions, if I could buy anything at a discount, I'm a huge discount investor. And it's hard. You have to kind of train yourself to do that because, like in April when we saw everything fall, I I bought a lot of things, and it's hard because you're thinking, well, what if it keeps going down? Well, I'm still buying it at a price that I like, and so that's kind of my opinion on it. I'm not sure. I have no idea what we're going to do. I do think we're really starting to fear the AI bubble. And we talked about this, I think, on the last
Yeah.
episode. And even with PE ratios being what they're at with some of the bigger names, everybody just seems to be invested in Nvidia in one way or another. And so if anything happens with Nvidia, with semiconductor environment, with AI, if we do see a bit of a bubble pop, then I'm ready to buy as much as possible. But I do think long term, and I think we even touched on this. I've been making some content on an ETF NUKZ nukes, and it is basically poised to run with AI because it's a nuclear reactor ETF, not just specifically owning nuclear reactors, but in the upkeep, in the building, in
Yeah.
the utilities side of it. I think it's really interesting how you can still invest in AI, but it goes to show if we do see AI pull back, so many things are going to be impacted. And the Qs being one of them. I don't think we'll see a 50% pullback with the Qs. I really don't. But I mean, you never know. I've 100% been wrong before. I don't think we're going to see Bitcoin fall below 70 in 2026. But again, there's a chance. I was investing in Bitcoin, not in Bitcoin specifically, but in crypto really early. I mean, in what, 2017? And I was not used to the volatility and I bought in at one of the highs and things dropped 80, 90%. I had a bunch of things down 90% in my portfolio. And I was like, well, that's the end of crypto. But no, it came back. And so long term, it's a long winded way of saying, I don't know, but I'm always ready to buy more when things do drop. But I'm curious
It,
your take on it.
and that's because we're in two different worlds.
Yeah.
Since I'm living off my income, and I will start shorting if we fall below the 200 day. I think
Yeah.
I learned that back in April, March,
Hmm.
April. I mean, in the tools that are available to us today, they weren't
Amazing.
available to us. So I can buy I can, since I'm in a IRA or in a Roth, I can roll into YQQQ when it crosses the 200 day. I
Hmm.
made that mistake last time. All you got to go do is look at a total returns chart back for 2025 and
Hmm.
see what YQQQ did when the Qs fell below the 200-day simple moving average.
Hmm.
And you're like, well, that's where the money you should have rolled your money to. And that's a simple. thought process. And again, I've been watching some of the banks and some of the other forecasting for 2026. My take is this is a midterm election year. This is
Mhm.
normally the year that we see the largest pullbacks,
Yep.
right? That is a known fact, or you can go back through history, right?
Mhm.
This is the year we see the largest pullbacks, but it's also the year that we actually see the largest gains from the bottom of the pullbacks.
Yep.
I'm looking for that little bit of pullback, and that's and that's the benefit. I mean, I think my QQQI price return is up like 7%.
Yep.
So let's say the price does fall, then I can just rotate. And my I think the biggest indicator for me is going to be the 200-day simple moving average.
Mhm.
Now I'll look around and say, why is it doing this? And
Yeah.
figure out, did we just drop a nuclear bomb on somebody? I don't know, right? What is causing this,
Yeah.
right? Before just using an indicator. But
Mhm.
I don't think the market's gonna do that. I think with quantitative easing,
We
the
should be
market's
safe.
the
Mhm.
market is the Fed's gonna bail us out. I mean, they bought some of Intel, right?
Yeah.
They're gonna, if Nvidia goes south, the US government is gonna step in because we're too big to fail anymore. And that's the reason for gold, silver,
Mhm.
and supposedly for Bitcoin, right?
Yeah.
Is we're too big to fail. They're going to print fear, especially in retirement. Is hey, what happens when this does happen, and
Mhm.
what are you going to do?
Yep.
You know.
Yeah, it's excellent points, and I watched I think it was Dividend Bull, the YouTube channel, really,
Hmm.
really solid channel. He put out a video talking about the midterms and how typically, yeah, like you stated, the year, that they take place, you see a drop. You see, a lot more volatility, and you do see typically it's a worse performing year, but the following year after is typically a significantly better year. So I think it is interesting, but there's still a lot of opportunity for these dips as we go into 2026. But I'm just curious the overall impact and what actually takes place.
That's right. I mean, we're going to get a new Fed chair,
Hmm.
and if
Oh,
anybody thinks that new Fed chair is not going to cut rates, they're just not paying attention,
a hundred
right?
percent.
You know, the Fed is supposed to be neutral. Well, okay, we'll just we're just going to leave that one alone because I'll get hate comments on that one, right? Yeah,
Oh yeah.
I mean we were doing rate cuts under the last president, and as soon as we got a new president, they stopped rate cuts.
Yep.
Right here. And I think that's why we saw Bitcoin ended up going down a little bit, right? Because
Yeah.
we didn't get the easy money, and when easy money comes along, Bitcoin is the first one that sniffs it out
Yep.
and it goes up, right? So easy money isn't available, and that's why we're seeing Bitcoin go down. There's
Hmm.
some other stuff about it. I mean, that's economics and stuff like that.
Hmm.
And we don't have that much farther to go to the next halving, right? I
Yeah.
mean, it's still a couple years away. And that's where I learned. Hey, I think we were talking before, earlier that somebody asked me about BTCI, and I did a post on X. What do I tell retirees, if they bought the top and it's now down 30%? My answer is, hey, if you're living off of 8% annualized, 28% payer can go down 70%
Yep.
and you still collect your 8% on your original investment.
Hmm.
So I sit back going, yeah. Am I down? Yes. Am I averaging down now that it's below $90,000? Here
Hmm.
and there, I buy a couple shares when I can. BTCI just paid me. I have Biddy too. That one's going to pay me this week. If it's below 90,000, I'll buy a few more shares and average myself down. But
Hmm.
at the same time, I'm only taking 8% of my original investment. And
Yeah.
I think you got to set that aside as you can't take the 28% and call it good.
Definitely.
Everybody that thinks that, oh, I can just live on 28% because that's what they're paying me.
Hmm.
I don't want the be that, I don't want to be that guy, but I want to be that guy. Just can't do that. I mean, yeah, I think that's common sense.
Yeah.
But hey, you know, everybody's in a different boat in a different position in life, and
Mhm.
we can't be too judgmental.
Yeah.
All right. But yeah, set some goals. I mean, and we're coming up to 2026. Any goals that you have for 2026?
Oh man, so many, so many. So YouTube wise, my goal now is to hit 75,000 subscribers, which I just crossed over the line and hit 35,000 yesterday. My goal for 2025 was to hit 15,000. So we've seen some crazy support, and honestly everyone's been so amazing in the community, viewers, everything's just been it's been such a positive experience. But that is a goal. I would like my portfolio. It's hard to track my whole portfolio because I have so many different investment vessels, some for YouTube, some for personal, and now I have Natalia's as well. And we're kind of, I would like us to hit a combined amount of probably $75,000 invested, primarily in our Roth accounts. I don't want to own any more real estate because real estate is super expensive to maintain as I'm learning. Yeah, that's really it. I'm hoping to focus on, learning a lot from phenomenal creators like yourself, as well as doing some more reading, getting a better feel for the market. Now that I can do this, I'm not in school anymore. I've had a couple years where I've really been able to track the market and see what's happening, and I've learned a ton. But just all in all, to make better content, to make more money utilizing the stock market to grow my portfolio and just keep moving forward, right? It's so funny because we are in such different areas where I'm trying to build as much as possible so that one day I can achieve the dream that you have, Brad. So I can have that, live
But
off the income and travel and do all the amazing things that you do. And it's fun. It's really cool. So I'm really happy that we're doing the podcast. I hope the podcast does super well. I know we discussed maybe a subscriber count. We try and hit 1,000 subscribers with the podcast and whatnot, which would be awesome. But really, I just hope we put out some good educational content and have some amazing conversations. And I think that we're going to. But let me flip that question to you. What are your plans? Any goals for 2026?
so you brought up the podcast, which I think that we decided it's going to be everything ETFs.
Everything the people decided. Yeah,
The
votes
people
votes are
decided,
in.
right? So by the time I post this, hopefully you start that new channel.
Yep.
Right? Don't want anybody stealing the channel from us.
Oh, good point. I'll do it today, actually.
Right? And then I think my goal is discipline. I always struggle with discipline and being a disciplined investor. And
Mhm.
I had a couple posts on X about discipline, and that's always mine. Is I got certain rules. Reinvest 3.5% below my cost basis.
Mhm.
Right. And if I was younger, I wouldn't do that.
Yeah.
But since I'm living on my retirement, and the reason I don't want to reinvest above my cost basis is just having my cost basis continue to go up.
Mhm.
It doesn't help me in a downturn.
Yep.
All right. Right now I can, hey, the Qs go down 7%. Okay, I'm at my cost basis.
Yeah.
Right. Then I can say, okay, do I sell it to short the market? It gives me time,
Mhm.
right, by doing that. So right now I'm reinvesting a little bit into Bitcoin. I did keep my BDCs. I'm looking at the next rate cut before I start adding back into those.
Yep.
And I think my goal for 2026, I think I'm right around the 14,700, which has been awesome.
Mhm. You
Right?
deserve
Let's
more.
face it.
You'll get more. You're gonna start
it-
growing quick for sure.
yeah, because let's face it, I've only been on YouTube 18 months.
Yeah, that's amazing.
Right.
Yeah.
And I'm just now, let's say getting in stride, right?
Mhm.
And I'm just going to say, hey, you know, I'd like to just grow a little bit, but I'd like to grow that podcast channel with you. I think that's going to be my biggest goal is seeing you succeed, growing that new YouTube channel. Right.
Oh,
I mean,
yeah.
just because we're in two different boats, right? I mean,
Mhm.
I'm going to go travel back, in the springtime to go see my mom.
Mhm.
Right. And then, next winter, we're going to have to find some place to move back to,
Yeah.
right? And be near our daughter, right? I
Yeah.
mean, it's just that we like going back and forth between the two because we could spend time with two different parts of our family.
Yep.
I don't know. I think one thing I love to do, since I haven't done it yet, is I haven't been at the New York Stock Exchange to ring the bell.
Okay. Yeah. Me
So I
neither.
so I've done the Nasdaq,
Mhm.
I've done the CBOE,
Mhm.
but I haven't been to the New York Stock Exchange to ring the bell. So I don't know what fun I'm gonna have to get into to say, hey,
Yeah, we gotta start doing, yeah, the NYSE funds.
yeah, it's just like yeah, because Curve has invited me to go ring the bell. They don't
Mhm.
have a date yet, but I'll be seeing those guys. I mean, I like their funds. I think Curve. Since we're going to talk about that, let's get to the next question that I think we should probably cover. What
Perfect.
are your favorite ETF issuers? Who issues the best ETFs in the marketplace from a let's go for this for an income investor?
For income, I think this is hard because there's so many, things could change. But I will say right now, I think Neos is the gold standard. I think the way they operate their funds, I think the abilities that they have to manage these kind of things. The only thing that worries me with Neos is they are putting out a lot of new funds. And so I don't want them to get kind of like the money bug that we saw YieldMax get, where they're like, wow, people are buying these funds hand over fist. Let's put out 25 more and not really care what's in them, right? But I don't see Neos doing that. I would say Neos, I do think they're the gold standard. There's a lot of really solid competition now, though. I mean, from
Hmm.
my perspective, I talk mostly about the weekly payers, and Neos doesn't have weekly payers. So when it comes to the weeklies, I give them a little bit more grace, I guess you'd say, because there's more volatility. I think it's just there's more risk usually involved with them. I think Rex shares are really making a good name for themselves. Despite I know they've had a lot of feedback on ULTI, because it dropped a lot when they launched it. A lot.
Well, that was like the worst timing to launch a fund.
Exactly. Yes.
Right? But
It was
hey, let's see if it recovers. I mean, I think that's a good test because
yes, it
Curve
is.
Curve came out with their one KYLD
Mhm.
on the exact same day.
Yep.
Right? Let's see if these both recover back up to their original price, and that's a good test.
100%. And I think despite those, because they have their staking ETFs too, their Osprey staking
Hmm.
that they don't talk about nearly as much. They have leveraged funds. They kind of do a mixed bag of things. I think Rex is really solid, and I specifically say that because I do track a lot of these weeklies against each other, right? And so typically I see Rex and Roundhill at the top, and different strategies, similar, I would say, fan base, I guess. They both are producing that income. I think Amplify does have a lot to work off of. I think QDVO has been really solid. They have a couple other ones that are doing really well, in the monthly game. But yeah, I have to lean, just towards Neos, because when I buy one of these ETFs, especially the single stock ones from Rex or Roundhill, there is a little bit of like unease where I'm like, man, I really hope this does well. I really need the underlying to do well. But when it comes to Neos, you have the Qs, you have SPY I that's really solid. You have gold. You now have their long short fund, their MLP fund. There's so many options that Neos gives that are more diversified and a bit safer. And we talked about BTCI. I'm looking to start a position in BTCI because I want to drip the dividends right now while it's low. It's so funny because as content creators, we talk about these things all the time, and we talk about them when they're at their highs. When they're at their highs and you're talking about them, the feedback is super positive. Everyone's loving it. And then when you talk about them at their lows, everyone's
Yeah.
like, "What are you doing? This thing sucks." And I'm like, "No, no, no. You have to
It-
understand, this is the stock market. This is what ETFs do. They move drastically, and especially with an underlying like Bitcoin, that's going to happen. But you have to see the opportunity there. But like we stated, you and I are at different points. So I do understand those that are trying to, that retired early to live off of BTCI. Or I get comments all the time. I'm retiring early to live off of YieldMax. And every time I'm like, the risks that you are taking with that is astronomical, right? It is mind blowing how we see Misty do well for 6 months. People are like, I'm all in, and just the kind of the lack of due diligence, I will say, and I feel bad to an extent because I'm like, wow, if I make content on MSTY, and
Yeah,
even if
oh
I
yeah,
say,
I'm guilty of it too.
see, but and it's so interesting, Brad, because I said over and over and over again, this is the highest risk ETF I've owned. There's so much downside potential. You never know. And I even stated, the math behind it. Well, it can't do this well over a 10, 20, 30-year period because it would require so much market cap to maintain these levels. Like, it's not possible. But then you get people saying, well, Bitcoin's going to go to 500,000 in 2026, 2026, so it's kind of hard to bring reality back into it. But I really just there's so much back and forth. But I do think investors, we have to do our own due diligence. And just because you and I do it and we post about it and we make content on it, doesn't mean that people should just follow us specifically. You and
Yeah,
I are so we're similar, but we're very different with our investment styles. I love leverage right now. This is in 2025 was the first time I ever really started utilizing leverage, and I still don't use margin, but I do use leverage. And I think we talked about this in the first interview that we did on your channel. I love it because I do believe long term leverage will help me outperform. And I do think we're still in an environment where the stock market will go up. I mean, from here to 10 years from now, I think we're going to be in a better position, right? So leverage does make sense. But if I make a video on a leverage fund, that doesn't mean everybody who is in retirement should be, purchasing that fund. It's completely different because we're at different areas in our lives and in our investment strategies. So I do think that's really, really important for everyone to understand. But I'm curious, yeah, I know you get comments on the yield max funds when we make them, on the interviews that we do. What has your experience been like when it comes to yield max?
so if we're going to talk about yield max, I think title gets a bad name because of yield max. I'm just going
Yeah.
to go ahead and throw that out. Uh,
Mm-hmm.
title is running uh, Fund Strats fund on from Tom Lee,
Mm-hmm.
right? GRNI is the income fund. It's only going to pay 10%.
Mm-hmm.
Looking at those stocks and they're writing on individual stocks, that that's going to be huge. I mean,
Yeah.
if the underlyings go up and they're only going to pay you 10%, they're leaving a lot of NAV growth in
Mm-hmm.
that fund. And they did the same thing with Soxy
Mm-hmm.
and Biggie, 12% payers, and they because they're only paying 12%, they've done just extremely well.
Yep.
I would love to find more of an AI dedicated fund
Mm-hmm.
that only pays 12%.
Yeah.
Right? But I got the GPTY and I got well, let's face it, I have Soxy.
Mm-hmm.
That's done extremely well. 12% on semiconductors. I have Chippy
Mm-hmm.
paying a lot higher percentage, but the NAV has not done as good as Soxy. The single stocks, anytime you're betting on a single, and I get in single stocks as the maverick in me, and then I
Mm-hmm.
get out of single stocks.
Yeah.
And I'm really going to have to lay down the the discipline that we talked
Mm-hmm.
about. Is I don't want to own a fund that has less than 40 stocks.
Yep.
I got a couple now in the really small one percenters.
Mm-hmm.
If that, I'm really starting to have to look at it going, I need the more diversification, right? And we
Yep.
can say, hey, gold is only one. And I'm like, yeah, that's more of a commodity. All right.
Yeah.
Let's
It's
all right.
different. I agree.
Slightly different. I mean, take a look at silver. I'm not reinvesting in any of the silver funds.
Mm-hmm.
I'm literally taking 21% from curve on silver,
Mm-hmm.
and I take my little bit that I need to live on. Well, I gotta do something with the rest of it, right? Sometimes
Mm-hmm.
I do have like you, a little bit more cash, and maybe that's something to do with it. And I like Neos. I want to see a competition from somebody. I think somebody needs to challenge Neos. One,
Yes.
I think that helps us all, right? I mean,
Mhm.
I like GPIQ and G, yeah.
Yeah, those are people don't talk about those very often, but they're very solid.
They're
They're up
very
there in
solid.
total return. Yeah.
They do a strategy different, and that's why I like them, right? So,
Yeah.
that's why I like Tap Alpha. That's why I like those guys because they write on weekly, 1 month out, and they adjust every week. I
Mhm.
really like that, and then I like Neos. I mean, those are my 3 core, and
Mhm.
then you have the little satellites like, QDevo, great
Yeah.
fund, right? I mean, great fund. I think that GRNI, I think that might be the next one that I add into my starter portfolio,
Yeah.
right? Yeah, it's total, right? It's the same guys at Yield Max,
Mhm.
but 10% on what they're writing on,
Mhm.
they're leaving us room for that growth. And that's where I get into that, some guys like, hey, I want, you know, yield boost and I want 90% or 40% returns because I can put a smaller amount into it and then
Mhm.
keep the other percent into 100% growth.
Yep.
Now, it's not my style of investment,
Mhm.
but I can understand that,
Yeah.
right? Because hey, let's well, we can throw some numbers out, right? I can have $100,000 in Neos and get Spy Eye and get 12,000 a year,
Mhm.
or I could put $40,000 and then have $60,000 in the Spy
Mhm.
and have one of these other funds and still make $12,000.
Yeah.
So I get the appeal. It's just not how I invest. I mean, that's
Mhm.
different. Different people with different aspects of life, right? Just
Yeah.
not something that I want to invest in. And nothing wrong with that, right? I mean,
Yep.
everybody has their own way of style.
Mhm.
And I'm not going to beat up anybody for buying yield max. Just, I cringe, and I think the round hill, I'm not a big fan. I'm just
Yeah,
not.
not your favorite. Mhm.
Not my favorite. I think I like Rex.
Mhm.
I think they're doing okay, right? And let's face it, I sold FEPI and AIPI. A lot of hate. Oh, you hate Rex shares. No, I don't. I bought MPII. I
Yeah,
mean,
exactly.
I don't get. I just saw that there was other funds that did better,
Mhm.
and I got back into that how the market was at the time.
Mhm.
As the market changes, Rex should have changed their option strategy, but
Mhm.
they didn't. And that's why I'm like, that's why I like stuff you know, that changes their strategy as the market changes.
Yep.
Right. I mean, we talked to the hedge fund guy, and he was talking about options trading and that hey, it was all very good for zero DTEs. But, sometimes the market isn't good for that. Maybe you should be right.
Exactly.
Well, that's the problem that I see with all the ETFs, and all of them but Curve.
Yeah.
Curve has that option that, hey, they can write shorter dated calls, longer dated calls. They can buy puts. They can
Mhm.
do a lot. And I want to see more funds to do something like that. The next style of ETFs.
Mhm.
I want to see those type of funds that come out and say, "Hey, I'm going to rate weekly. I'm going to rate monthly. Maybe I rate on a quarterly if I already
Mhm.
made my revenue and I rate them so far out of the money that you don't have to worry about getting caught away." And we'll see how that plays out.
Mhm.
I think it's an exciting time to be an income investor,
Yeah. Oh, yeah.
right?
It
I
is.
think,
It's amazing how many funds are coming out, it's hard to track.
yeah, it's hard to
Uh,
track, and it's really tracking down when you have funds. And this is the one that I saw some financial advisor, big guy out of Canada. It's got 400,000 subscribers, really beat up cover call funds. And I'm sitting there going, and then I saw his solution, what he wants you to do
mhm.
to withdraw money. I'm like, oh my gosh, that's the worst solution I've ever heard.
Yeah.
I mean, I sat back and went, okay, I can understand that you don't like cover calls for income,
Mhm.
but his solution, you needed a crystal ball to figure out what you're going to do. And obviously, he says that he can tell you what the market's going to do next year.
Yeah, they always pitch that as
And
if
it's just like, that's I'm taking the risk off. But getting back into that, I want to see more competition. I'd love to see more competition because I like to see Neos, and I fit Neos up about this. I like to see them lower their expense ratio.
exactly. It's really high on some of these. I mean, I get it more for the weekly and for the zero DTEs that are super actively managed, but it's still I that's where I think they may be getting into the money side of things as well, where it's like, wow, we're making a lot of money on these. We can up the expense ratio. We have a good reputation. Maybe we can make more money off of them. And that's not what that's not my favorite.
I don't know if that's a I don't know if that's 100% true, but
Yeah.
w when you have a $6 billion fund and you're charging 0.68 as a expense ratio, and
Hmm.
that's the QQQI and SPY-I,
Yeah.
you sit back and go, "Okay, how much money is that?"
Hmm.
Right? Yeah, and that gets because always been told right around that $35 million is the break even point for a fund.
Yeah.
From an operational cost, from the lawyers and everything else that comes along with that. So
Hmm.
you get into that. I can understand when you're under $100 million of assets under management of being a little bit higher,
Yes.
right? But once you hit 1 billion, the game changes. You know
Hmm.
the game really changes, right? And what happens if you ever get to, I don't know, 35 billion, right? Now you're how many times more profitable than you need to be?
Yep.
And that gets back into, I don't want to call fleecing the investor,
Hmm.
but let's face it, 0.68 is not that bad compared
It's
to a
not.
0.99.
It's not. I'm thinking more what NLSI has a 0.98. No, NLSI has more because it has the fees on top of everything. That one
Mhm.
was but I still don't have the full understanding of how much of those you actually pay versus what they actually take out and what they try to, offset. Because I had a guy on the channel, with a growth ETF, and he said their fees were like 3%, but they paid a dividend to try and drop that down and all these different things. And his like profit was only like 0.3%, but you have all the fees that tie into it with buying and selling the underlying ETFs and whatnot. So there is a little bit of mystery, I would say, from the retail perspective of it. But
Well,
I mean,
it's
yeah, go
that
ahead.
new long short fund.
Yes,
It's 2.38 or something like that. But that's the acquisition charges.
tied
That's
into
not
everything.
that's not what they're making
Yeah, because their
because
expense was under 1%, I believe.
yeah, it's right in line with their normal range is,
Yeah,
right? But that 2 point they have to get loans on those shares, and then they have to pay any dividends those shares would have paid out from those stocks. That all has to get added in. So
yeah, it's complicated.
yeah, it's complicated. Troy's coming on the channel in a couple weeks, and that's we're gonna have to talk that out for people to understand it.
I'm looking
Uh,
forward to that. Yeah.
I tried to do my job to explain it, but maybe he can explain it better. I don't know. All right, but yeah, I don't think they're doing anything wrong, but I just want to see competition.
I would love for like 5 to 10 more Tap Alpha funds to come out. Honestly, I think that would be really cool. I think there's such a market for weekly paying low yielders I think it's such a missed opportunity right now. If you had like there's around I don't know if Roundhill is against the weeklies or if it's something maybe they have in the works, but if you had QQQI and SPY-I on a weekly basis, I think they would be some of the largest income funds. They would stand out. I think you do have a huge audience that likes the weeklies. Some people do prefer monthlies, but I think it's a smaller audience. But I still think there's a
I,
big gap. And I've
I
talked to
well,
Sai about that.
We know Tap Alpha's coming out with them.
Yep.
He's going to do a little bit of leverage, and he's going to do a weekly payer, and it's interesting. And I'm just going to say it's interesting, right?
Yeah.
It'd be great for a younger person, maybe,
Yeah.
just like Neos is coming out with their leveraged fund.
Yeah.
That might be great for some. I mean, I'm more looking at QQQH,
Hmm.
right? Having
Yeah.
downside protection
Yep.
than I am, 1.5 leveraged boosted fund. I mean, that's just
Yeah.
me. It's just like, oh, I don't know. I just want to. Yeah, but I look back and go, I think we all have a different perspective of where we're at. And I know that I'm going to end up buying the boosted fund from Neos. I mean,
Yeah.
yeah, come on, come on. This is Brad, right?
Yep.
And Brad normally goes and heads and being a little bit of maverick.
Yep.
But in that same conversation is I think that I'm going to buy QQQH at the same time.
Yeah.
So if something does bad happen, I don't lose all my capital.
Yep.
And I think that's the bigger play in that. And that's just because of age dependency. Right? I mean, that's where
Mhm.
we are. Yeah, it's just interesting because granny shots from Fundstrat,
Mm.
right? I did not know that. That was a total fund. I mean, it's same house as Yield Max, right?
Yeah.
And now the new one, GRNI, 10%. I don't think enough people talk about that. I
Mhm.
think that's going to be a video. Because they share their strike prices, but they didn't share or at least the last time I checked it, they didn't share how many strikes they wrote.
Mhm.
So I can't tell if they wrote on 100% of the underlying or the
Interesting.
notional value. All I saw was their strike prices.
Mhm.
But hey, I can rate strikes and only rate on, 5% of the notional value and 95% is uncapped.
Mhm.
I couldn't tell you that because I didn't see it, but that might have changed. But I'm gonna go look at that one again. 10%. To
Mhm.
me, that's and I think a lot of us, what I really want is a fund that shorts the market when the market starts to go down. But
Mhm.
I don't think we're gonna find fund managers willing to do that for us. I think they're gonna
Yeah.
rely on us to manage that ourselves.
Yep.
Right. So hey, we'll see how the market changes. Right. Who knows? Put it like this, I will never run out of content to talk about.
Yeah. It's a solid business to be in. There's never ending ETFs coming out, so.
Yeah. And silver and gold, again, I'm not reinvesting anything
Mhm.
back into silver and gold. But then
Yeah.
again, I sold my SPY eye and bought silver and gold funds.
Interesting. Yeah.
Oh yeah, I mean, I took a lot of heat when I did that, but that was the best thing I probably could have done because
Mhm.
if I wanted to, I could sell all the gold and silver funds now and go back into SPY eye,
Yeah, and you're
and
set.
I have $20,000 more to invest,
Yep.
and my distributions were almost like $600, $700 more a month
Yeah.
during that time period. It's just like, oh, that was a good call on my side. But
Yeah. Brilliant. Yeah.
yeah, but again, I think I'm going to start a little bit of SPY eye again. I think that's because everything's above my cost basis. So it's
Yeah.
always like I have to reinvest into something. What's it going to be? And I think it's going to be, maybe a little boosted fund back in the SPY eye, QQQH.
Yeah.
But I'm looking for that next player. Looking for that. I'm looking for the David fund on uh, s- stocks and gold. I really want to see how he's going to rate that
Yep.
because that adds leverage to our life,
Yep.
but it's not leverage both on stocks and gold.
Yeah. There's
Right?
a
It's
lot of stuff coming out too. We'll have to do a full episode on those specifically, and we give them the breakdown. That'd be really interesting.
Yeah, and I know David's gonna come on the channel. I
Oh,
mean, it's
definitely. Yeah, we'll have to have him on.
right? We'll have to have him on, right? Yeah,
Yeah.
just to talk about it because I do believe they're past the SEC hold time, so
Yeah.
it's just a matter of when they just
Yep.
come out, right? It's the same thing with the Neo's boosted fund. I
Yep.
know that they're past their hold time, and the email I got from Troy was he didn't have an exact time frame, so
Mhm.
he didn't let out hey, it's next week or 2 weeks, right? And
Yeah.
normally he'll say, "Hey, it's coming soon."
Yep.
Right? He won't give me an exact date, but he'll say it's coming soon. So
Mhm.
that tells me maybe, 2nd or 3rd week instead of the 1st week of January,
Yeah.
right? And I think that's liquidity. I think when the funds get launched, liquidity will be higher
Yep.
after a couple weeks.
Yeah.
Right? People on vacation or just getting back from vacation and stuff like that.
Yeah. Oh, yeah.
So, hey, well, this has been fun, and we'll start doing this coming up on a weekly basis on the new channel.
Yeah, I'm hoping next time we upload, it'll be on the new one. We'll see.
We'll see
Fingers
how it
crossed.
goes. But
Yeah.
hey, thank you everybody for tuning in, and I will share a link to the new channel as soon as Spencer makes it.